Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be my friends. Hey, I'm just trying to make a little bit of money. My job is not just to entertain, it's to teach. So call me at 1-800-743-CBC. Tweet me at Jim Cramer. It's starting to dawn on people. A market that only goes higher because of data center spending is a perilous market. And we don't like that. Increasingly, I feel like there are better places to hunt for winners than the AI space, where many, not all, but many feel picked over. And that's why today the Dow jumped 327 points, the S&P advanced 0.06%, but the Nasdaq declined 0.26%. It feels like the revenge of the nerds, people, with the nerds this time being reasonably priced stocks of companies that don't need trillions of dollars of data center spending to pan out and aren't usually found on the Nasdaq. Before you sniff at the pedestrian nature of today's leadership, the bulls should be gratified, at least the ones among you. See, if this were a bad market, the weakness in the data center related plays would have sent everything down. The fact that instead we had a rotation into lots of other groups show you this market has tremendous strength. Instead of everything being dragged down by tech, we got a market that defies the bears and has come up with a ton of undervalued companies that could catch fire now that the government shutdown finally coming to an end. It's gotten broader, and broader is always good. First, the travel stocks came roaring back. The battered airline stocks, United and Delta, have found their way back into the winner's circle. Same goes with Expedia. The end of the shutdown will stop the price target cuts right in their tracks. When we see these travel stocks come back to life, you can expect similar gains from the cruise lines and the hotels. Dude, there's a whole group of analysts just itching to come out here, cover these stocks. They've gone silent because of the decline in consumer confidence, some weak bookings numbers. But now that the government's about to reopen, do you really believe these analysts won't immediately start turning positive tomorrow morning? Hey, Marriott had a terrific quarter. Why not just get out from under the desk and push that one? And which casino analyst can resist pushing the now in favor Wynn Resorts, especially when China's starting to get stronger? Losing that post-COVID travel thesis has been brutal, hasn't it? Good to have it back. It's been at least a week since someone has urged their clients to buy the stock of American Express. I know it's counterintuitive, but you believe this stock's already at an all-time high today? That's perfect because everyone likes a good price target boost. How can you not raise the price target of American Express when it's never been this high?
House of pleasure.
Let's not forget the second-day thesis for travel includes the aircraft themselves. Last week, I heard from Larry Culp. He's the CEO of GE. During our sojourn to Harvard Business School, their business is remarkable. But that terrific quarter was buried by the government shutdown. Oh, and how about the fact that Boeing's making a comeback with its cash flow, yet all its stock does is go down? That's worth an analyst crawling out from under her foxhole, saying good things, even if it's below the 50-day or the 2-day, I don't know, the RSI, MACD, anything. Glum people don't go out to dinner, do they? They hunker down and stay home, all bummed out, eating ready-made salads and whatever else they can afford from the supermarket without breaking the bank. That's been a problem for millions of people with the federal employee furloughs and the food stamp cuts, stuff that makes us look like a banana republic, except I think that that's an insult to the apparel chain, which is part of a broader turnaround at the Gap, by the way. Another stock inching higher after a quarter I felt was pretty good. What else? I see a trio of restaurants that have been down on their luck starting to make moves here. Brinker, symbol Eat, Texas Roadhouse, and Chipotle. I know these moves are nascent, but Brinker, the parent of Chili's, reported a terrific quarter. No one seemed to care because of the shutdown. They care now. Texas Roadhouse missed the quarter because of beef inflation, not because of traffic. The actual traffic, the customer count, was astounding given the shutdown and the steak inflation. Chipotle, it's doing some rivalry week, buy one, get one college promotion. Perhaps that's the hook they need to breathe new life into one of the worst stocks in the world. All I can say is, hey, when does Harvard play Yale? Let me throw in one of the more despised stocks out there, maybe the most, and that's Starbucks. Excuse me for liking that last quarter and the move to coordinate the price of coffee, even if it's a minor portion of the overall cost structure. You can push Starbucks return of the Oh, and here's a staple. When people want to go out to dinner, analysts think they always had the Olive Garden. So you need to go buy OG parent Darden. From what we've been hearing about consumer confidence, do you think that the Grinch had already stolen Christmas pretty early, huh? But with the shutdown ending, It's a fantastic time for retail analysts to get on the horn and pound the table for the usual suspects, especially with the sudden collapse of oil. Swiss shoemaker On Holdings reported a remarkable quarter and guided for no discounts this holiday season. Strong demand. That upside surprise should be enough to send some retail analysts to the morning meeting to say, we hear good things about footwear. How can they not do that? They can't let someone else do it first, right? You got to justify your job. So just go recommend Dick's, the big seller of sports footwear, among other things. Let me make it easy for these analysts. Jar their memory. The following retailers were doing well before the shutdown, so they're worth reminding the clients about. Urban Outfitters, which had one of the best quarters we've seen in ages. Macy's, which is about as low as you're going to get after 10 times earnings. Come on. Even as the stock's within spitting distance of 52-week high. And would it be too much to recommend Costco down more than 150 points from its high and now despised? I don't think so. We've heard enough about how much money Sam Altman from OpenAI is going to need to borrow in order to finance hundreds of billions of dollars of spending commitments. This CEO, by the way, is like a one-man borrowing machine. He's created demand for loans from everyone, including those who might not even know they're making the loans. In the meantime, the bank stocks are absurdly cheap versus the rest of the market. The SEC has been on partial hiatus during this fiasco of a shutdown. Can you imagine the pent-up demand, the huge amount of IPO filings that Goldman Sachs, Bank of America, JP Morgan, and now the feisty Wells Fargo have to do? It's enough to make the quarter. Even more so, I expect deals galore between here and the end of the year. Who can resist when we have an antitrust department that perhaps should be called the pro-trust department? Hey, who's that pro-trust? Finally, let's give a nod to Pharma. We had Amgen on the show the other day announcing a breakthrough in Repatha. It's every other week injection, squelches cholesterol to a level where it helps prevent heart attacks. Why not go by that? Pfizer, hey, getting into the most lucrative business in the world, weight loss, with the acquisition of Betsera. And Lilly's knocking on the $1 trillion door with a pill form GLP-1 drug rivals. You know what? Who needs diet and exercise? But those are actually good for you, too. Here's about a month. This market could have been eviscerated today now that the year of magical investing is coming to an end. Instead, we're watching the money flow back from OpenAI and company, even though that's private, into the rest of the economy, the part that doesn't need a federal data center backstop if the AI thesis goes awry. Welcome back to growth investing non-tech style. We missed you. And thank heavens nothing needs to be built out for these stocks to run. The building's already done. Spencer in California. Spencer.
Jimbo, thanks for taking my call.
Oh, absolutely, Chief. What's shaking with you?
All right. I've been watching you for all 20 years of Mad Money. I come home from school as a kid every day and watch a show with my dad, Ken. Now I've finished my med school and anesthesia residency in the last few years. I'm finally making some money, and I'm ready to put that money to work with your help.
I'm loving this. Let's go to work together.
All right. I'm on chapter 14 of your book, learning about how to read balance sheets. The company I'm looking at had a less pristine than usual balance sheet this quarter and dropped about 25% after earnings. Is this a good entry point for Celsius?
I was surprised about that miss, and frankly, I didn't understand it. I have been behind Celsius. I almost include a big part of my book about Celsius. Thank heavens I actually didn't get in because that was a bad miss. I think that we have to wait another quarter. I'm sorry. That miss was not good. Got to call it like I see it. Stafford in California. Stafford.
Hey, Jim, how you doing?
Real good. How about you, Stafford?
Good, thanks. I want to get your thoughts on Deere stock, John Deere.
You want my thoughts on Deere? No matter what happens in the country, we are a country where farmers get checks. And I think that's great because I want them to keep farming. And what do you do when you get a check? You buy a Deere. All right? Look, the market could have gotten clubbed today beyond recognition now that the AI trade's finally rolling over. But the rotation into stocks representing the real economy is keeping us afloat. I like it. I like growth investing non-tech style. Oh, man, money tonight. Flood Entertainment's in the move after reporting good earnings. I'm getting the latest read on the sports gambling space of the parent company, as you know, is FanDuel. Then AMG soared 9% today on the heels of its analyst day. I'm breaking down the highlights and where I think this stock could be headed next. Plus, we got private player Databricks on, and they've been capitalizing on the AI boom. I'm checking in with the company's top brass to see if an IPO might be on the horizon. So stay with Cramer.
Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. Hashtag Mad Mentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.